Becoming a successful stockbroker requires an understanding of the stock market, financial markets, and economic trends. To achieve success as a stockbroker, it is important to be well informed about the risks involved in stock investments, as well as different strategies for making profitable investments. In this video, we will provide some of the best tips for stockbrokers looking to make successful investments in stocks. We will discuss the importance of doing the research before investing, understanding risk management strategies, and staying up to date on the latest news affecting financial markets. With these tips in mind, you can ensure that your investments maximize returns while minimizing risks. Skills that you need to be successful in this profession. Being a successful stockbroker requires more than just knowledge of the financial markets. It requires a range of skills and qualities, such as strong analytical and problem-solving skills, self-discipline, personal responsibility, communication abilities, and an understanding of the laws and regulations governing the trading industry. Moreover, it is essential for stockbrokers to have an in-depth knowledge of the products they are offering to their clients. They must also be able to maintain professionalism under pressure and handle difficult situations with tact and composure. Stockbroker career with a focus on options trading. A stockbroker career that is focused on options trading requires an in-depth knowledge of the market as well as skills such as problem solving, statistical analysis and forecasting, and communication. To be successful in this position, stockbrokers must also demonstrate financial responsibility and team spirit. Stockbroker career with a focus on international trading. Stockbrokers specializing in international trading must develop skills such as the ability to understand complex issues related to international finance, global investing, and trade regulation. The success of this type of specialization requires experience working collaboratively with colleagues from different countries, building trust among stakeholders, and maintaining confidentiality. Investment banking careers such as corporate finance and mergers and acquisitions also require international experience. Brokerage firms hire experienced investors to break down the markets, analyzing trends in economic and political events. They assess the impact of these events on investments, advise clients on different strategies for investing in volatile markets, develop financial models for trading positions, research company information for investment opportunities, and negotiate trade agreements with companies such as mergers and acquisitions or foreign equity trades. The demand for international traders is on the rise. The United States Department of Labor, DOL, predicts that as many as 228,000 new jobs will be created in the next 5 years in this area. The U.S. Bureau of Labor Statistics predicts that 7% growth for these types of positions over a 10-year period. International trading is a specialization within the field of financial services and an occupation with largely self-employment opportunities. To become an international trader, professionals typically have to complete a bachelor's degree program or its equivalent and have experience in investment banking, foreign exchange operations, market research, or commodity trading. This type of job requires extensive knowledge of securities, commodities, foreign exchange, and other financial instruments. International traders typically work for companies such as hedge funds, investment banks, or brokerage houses, but may also be self-employed. Part-time international traders generally have more limited opportunities for advancement than full-time traders and are more likely to need a second job during busy times of the year and on weekends. The World Trade Organization, WTO, was established on January 1, 1995, with the intention of facilitating freer trade around the world by improving market access for imported and exported goods and services. The education that is needed to be a successful stockbroker. Becoming a successful stockbroker requires a certain level of knowledge and education in the world of finance. In order to become successful, it is important for one to have a strong understanding of the financial markets, economics, and all the regulations related to stock trading. Additionally, having an understanding of mathematics, accounting, and statistics can be very helpful in mastering the art of stock trading. It is also important for aspiring stockbrokers to understand basic concepts like portfolio management and risk management. Furthermore, having a good understanding of market trends and reading financial documents can help you make informed decisions as a stockbroker. A stockbroker is any person or company who buys and sells securities on behalf of clients such as corporations, banks, and individuals. There are many types of stockbrokers, including futures brokers, commodities traders, forex traders, options traders, and more. Unlike some other careers, there is not necessarily a certain set of skills needed to become a stockbroker. However, having a strong foundation in math, accounting, and finance can be helpful in understanding the financial markets and making good decisions on behalf of your client. Stockbrokers must have a strong understanding of the basic concepts related to stocks, bonds, and futures. They must also have a good understanding of how to calculate risk and potential trade returns. Furthermore, they should be able to identify market trends in order to analyze them and make sound decisions accordingly. Finally, stockbrokers should be attentive in taking notes during negotiations so that they can provide their clients with valuable information when needed. Additionally, it is important for aspiring stockbrokers to know how difficult it can be to become a stockbroker, as there are many regulatory requirements that you need to meet before becoming one. Stockbrokers must have a strong understanding of the basic concepts related to stocks, bonds, and futures. They must also have a good understanding of how to calculate risk and potential trade returns. How to create a client base. Becoming a successful stockbroker requires more than just a knack for trading stocks. To be successful in this field, you also need to have a strong client base. Establishing a loyal customer base is essential for any stockbroker in order to build trust, create repeat business, and increase income. There are several ways that stockbrokers can attract and keep clients in order to increase income. 1. Be realistic about pricing. Stockbrokers should be realistic about their pricing and provide an accurate estimate of the amount of time and resources needed to complete a trade or strategy. This is an important factor in customer retention. The customer will not be happy if they pay for a service that does not meet expectations, such as if the broker does not have the capital or resources to complete their trades in a timely fashion. 2. Have stock services available. Stock services include options trading and day trading. These services are highly sought after by clients, and stockbrokers can increase their income by offering them. 3. Cater to the client's needs. Stockbrokers should cater to the client's needs and not their own. For example, if a client comes into your office asking for information on bonds but you have no experience in that area, it is best to send them to someone who does or instruct them on how to research the subject themselves so that they can get what they need without inconveniencing your staff or delaying business for other clients. 4. Hold events at your office. Events such as seminars give your company a chance to network, break down barriers, and promote your services. 5. Offer different types of financial advice. Financial advisors should offer different types of advice to clients so that they can get the best advice for their situation and not just one type of financial advice that does not fit the client's needs. 6. Keep it real. Make sure your staff doesn't put on an air about what you do as a company, because this is not only dishonest but can create more problems for investors and customers than it solves. Thank you for watching.